Live with the mortgage calculator. Today we're going to go through some live mortgage rates and then we're going to do a deep dive into investment properties. So we'll get it started here shortly. We will wait here just a moment to go live on all the different platforms. We put the chat up on the screen there, so feel free to drop a comment in the chat as you tune in. We appreciate it. Thank you for everybody tuning in on all the different platforms, YouTube and Facebook, LinkedIn, Spotify, Apple Music, everyone tuning in from all the different platforms. We appreciate it. For those of you that's just jumped on, go ahead and drop a comment there in the chat. We're getting started here in just a moment. And remember, we do this show at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. All right. Thank you for the comments there, Adam, Michael. Everybody tuning in nice and early. Appreciate that. And it looks like we are live on all the different platforms. We can go ahead and get started. Feel free to keep dropping comments there in the chat and put any questions in the chat if you have any about our deep dive topic as well. All right, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates for some different programs, and then we do a deep dive into a different topic every day, a different loan type. Today, we're going to be talking about investment property loans. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into investment properties. But before we do that, let's do what we do every morning, which is go through some live mortgage rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like this morning.
All right, let me switch my screen and we will check it out. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is October 26th, just after 11 a.m. So all these standard programs are live here. If you'd like a full breakdown, a full itemized loan estimate of all the fees that go into the APR, please get with one of our team members. We have over 400 licensed loan officers in 24 states for our primary and second homes, and we can do our business purpose DSCR loans in 44 states. So for the demos today, we will set up a scenario where we can compare the APR across the programs. So we'll set up the same scenario for all of them. We will have a $400,000 loan amount. We will set the LTV to 80% loan, 20% down payment. We're going to try to find the lowest rates since the rates are a little bit crazy right now. And we'll compare our conforming conventional options to our FHA options, which is usually the next on the list there. And then we'll check out expanded guidelines, also known as non-QM, where we have over 5,000 additional options using alternative income. We also have VA, which is only for our eligible vets and active service members. So if you are eligible, let us know. We can quote it, no problem. Most people are not, so we don't do that live. And USD is only for eligible properties. So again, if you're shopping in one of those areas, just let us know. But since not everybody is, we don't do that live. So we'll start with conforming conventional. We'll do a purchase, 30-year fixed, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for the estimated credit score here for all the demos, we'll use 760. And for the estimated debt to income ratio, we will use 40%. So with these settings, let's check out what the rates are doing this morning. A little bit up from yesterday. As you saw, the markets went down the last couple of days, went back up yesterday a little bit here. So best option 7.499, 2.25 discount points, puts the APR there, 7.707. So good option for our customers that can qualify with conventional. Definitely keep an eyeball on those rates as they go up and down here through this volatile time. But if our customer doesn't qualify for a conventional option, usually the next one we want to check out is an FHA option. So we'll keep everything else exactly the same as our other demos. The only thing you've edited here is the loan type to FHA so we can compare apples to apples across the programs. FHA does allow a more lenient credit profile as well as a much higher debt to income ratio, but we'll keep everything the same so we can compare apples to apples here. And FHA, it's about the same as it was yesterday, so it's actually a little bit different spread here. 6.75 rate, 2.5 discount points, puts a final APR at 7.393. Conventional, just a touch higher there for our customer that qualifies for both. Definitely check out FHA. Might save you some money, even though it does require upfront and yearly mortgage insurance. And our customers that must use it, definitely some great changes that have been added there. So some good options here for FHA. I don't think that's much change from yesterday, if I recall. Now, where we love to specialize is if our customer doesn't qualify for FHA or conventional. Unfortunately, many other banks or lenders have to deny that customer. But that's where we love to present our non-QM options, where we have over 5,000 other loan programs under expanded guidelines. So we'll keep everything else the same. The only thing that pops up here is a new option for income. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what most people are used to. So we'll typically use one of these alternatives when we use non-QM. So we have asset-based programs, business bank statement programs. The investor programs are just for investment properties. We have personal bank statement programs, which is what we'll use for the demo. We also have RSU, stated income, VOE, 1099, P&L, and we do those on the different episodes of the show. So check those out if you want to see some of those specialty options. For the demo, for the live pricing, we always use the 12-month personal bank statement, most popular program. And that's for our self-employed borrowers. Many times it's our self-employed borrowers when they submit tax returns, may have various write-offs and may not qualify or just may not quite get enough income to get that home they really want. So we'll solve that problem using no tax returns at all, just their last 12 bank statements to determine a debt to income ratio here of 40% in this example, using just the cash in the bank. So most of the time, our self-employed borrowers qualify for double or triple the income and can therefore get the home they really want. So let's check out the bank statement options. We'll go down to the traditional ones. These ones are a little funky. Again, the rates are funky right now, so we have some programs coming up that probably shouldn't. This portfolio option for bank statement, 8% rate, 2.5% discount points, puts the final APR at 8.117. So a good option here for a traditional bank statement option. And the conventional is just about, I think today, about 0.4 cheaper. So very comparable there to the conventional options to use bank statements. So a great solution for our borrowers. Now you'll see there's dozens, if not hundreds of different variations here as we scroll down. And some of these at a little bit higher rates and costs may allow bankruptcies and foreclosures and other credit issues to go by, and may also use different methods to calculate the bank statement income. So tons of different options. Please get with our team. They will find the best one for you here out of the hundreds of options. And now we'll do some live pricing for investment. So obviously that's going to be our topic for today. So Jose is going to have some specific examples, but we'll do our 2 live examples we always do for investment properties. We'll set up the same scenario, 80 LTV. We'll look for the lowest possible rate we can offer for our programs. And the programs we can go through are the conforming conventional options. And we can also check out our non-QM expanded guideline options. FHA, VA, USDA, all the government programs do not work for investments, so we'll stay with these 2 options here. First, we'll check conforming conventional. Everything will stay exactly the same. All we've edited here is the occupancy. So now we can check out the conventional options. Now, yeah, this one is always going to be a little bit weird here. So with conventional, the loan level price adjustments for investment properties are pretty insane right now, especially with the way the rates are being volatile. So you see here the option at the top is not technically a agency product. It's a portfolio product, but using the agency guidelines here, conventional guidelines. So because it has no loan level price adjustments, it has a much better profile here. 7.5 rate, 3.5 discount points and cost. It's a final APR at 7.75. So great option there. Now, to look at the next option here on the list, it's a big difference when we add those loan level price adjustments that the agencies have added. So the first true conventional option, 7.875, 5 discount points and cost, which is probably not even compliant. So again, this is just a demo here. And the final APR, 8.175. So you can see here, not very feasible for customers to use the traditional agency products. Definitely recommend anybody that wants to go full doc, check out our portfolio full doc product so we can avoid those loan level price adjustments. Or the more common scenario is to check out our non-QM options when we're doing investments. So for the final demo, do investments, we'll do ADLTV again. And we'll look for the lowest rate we can offer compliantly here. And we'll check out the expanded guidelines, aka non-QM. Now, the most popular income option here when we go to the alternative income is the DSCR option, which is only valid for investment properties. But that's because it doesn't require any income info or employment info from our borrower. We simply use the estimated rents from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITAA of the mortgage, the expenses, aka the property cash flows, that's a ratio of 1 or higher. If the property does not quite cash flow monthly, that's a ratio under 1. We still have options there. For our demo, we always use 1.5, which is the highest value the program accepts, so we can see all the options. And finally, we must select a prepayment penalty. 3 years is standard. That's what we use for the demo. We can always select 0. That will limit what shows up and cost more. We could also try 5 years. That will limit what shows up, but save our borrowers some money if they want to hold the property. 3 years is standard, though, so we'll select that so we can see the most common options. So let's check out the DSCR non-QM options today. All right, went up a touch from yesterday, but still beating the true conventional, right? So it doesn't quite beat the portfolio full doc, conventional portfolio version, but it does beat conventional. So it's a great day when a DSCR loan beats a conventional loan for investment property, right? So top option here, DSCR, 7.875 rate, 3.25 discount points and cost, APR 8.017. I believe the conventional investment was 8.117, something like that. So beat it by a hair. Many investors are doing DSCR loans when they're more expensive. So I'd say 100% of investors will do a DSCR loan when it's cheaper than conventional. But even when it is a little bit more expensive, DSCR affords a lot of flexibility. You can do 1, 2, 5, 10 loans at a time, no income, no employment. So you can cash out multiple investment properties to purchase multiple. So tons of different options here with DSCR. And it is an amazing day when actually our top 2 options here appear to beat the true conventional. So this option does as well, 7.99, 3.5 discount points, puts the final APR 8.14. I believe the conventional was just a touch higher. Now, if you scroll down here, we have tons of different options. Some of these at a little higher rates and costs may allow things like bankruptcies, foreclosures, other issues to slide by, as well as may allow us to use alternative income calculations, specifically on the DSCR, like short-term rental income. Also, some of these may allow alternative property types that are typically not allowed. So tons of cool options once we get in here into the DSCR programs. So please get with our team. They will find the best ones. And now let me pull back up the topic for today, which will be investment property. So our final 2 demos live we do for investments. However, there are thousands of different options for investors, and that's what we definitely love to specialize in here is specialty options for our investors out there. So I'm sure Jose has some tricks up his sleeve. Of course, on our live pricing, we always do the conventional option, which is a little bit crazy right now. Definitely don't have many takers on those options currently, but we have a ton of takers on the non-QM options, especially the DSCR options for investment properties. So tons of different ways to approach that. So Jose, I'm not sure what tricks you got pulled up here, but let's go ahead and check it out.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Investment property is definitely the rage right now. Investors are scooping up as many properties as they can find in the market. Rents are increasing. even though interest rates are increasing, it appears that rents are increasing just as fast, and the investors are enjoying positive cash flow. What I want to highlight in the example today is just mainly discuss how what are the different options out there, especially when we're looking at different income types and also different property types, and highlight the benefits that non-QM for investment has over agency. So let's get into the first example here. Excuse me. So our first example is at an 80% 80% one unit. Now, this is the product that Nick has been highlighting, which is a portfolio product that uses automated underwriting. So similar to conventional, going to use the Fannie Mae guidelines, but not the Fannie Mae um, loan level price adjustments. Hence, our better pricing on this one. This is again for a one unit where you are looking at 8.875 being our lowest cost option, and you can buy that down to 8%. And now I wanted to highlight the difference between this product, the portfolio product, and a standard conventional loan. Same one unit property, but you will note here our lowest cost option 8.625, 1.75 points, whereas this option at 8.625 was charging 1 point. And I will state this option that I found here at 1.75 at 8.625 was the outlier, was the only one at that price. Most of the other ones were above 2.5, 3 points at the starting lowest cost option. So these are very good options, but you can see that the portfolio option does blow it away. Now, non-QM is really where you're going to find some great benefits for investment properties. Rates are a little bit higher, but then again, no mortgage insurance applicable above an 80% LTV. Um, so here you're looking at 10.5% at as our lowest cost option, and you can buy that down to 9.625. And I do stress that this is 85% full doc option. Now we have a bank statement option again, non-QM, again 85% LTV, something not possible on our agency and still remain with compliant rates. And we're looking here 10.499 is our lowest cost option, and 9.499 is our lowest rate option. And to further add some context here, now you can see our DSCR one unit purchase at an 85% LTV, right? It's a mind blower. Keep in mind, this is for one unit properties only, 2 to 4 units maximum LTV. You're going to have for the DSCR is 80%. But if it's a one unit and your DSCR is 1.25 or above, you can definitely opt for the 85% LTV option. 11.375 is our lowest cost option at par, and you can buy that down to 9.875. And then lastly, wanted to highlight another example, and actually this should be 75% LTV. I got a typo on there. This is our conventional full doc 2 to 4 unit, and this is where conventional does definitely start limiting the options, because right here essentially we'd have to go to a 75% LTV to be able to get compliant rates for this example here. Whereas in our non-QM options, we can definitely go to an 80% option easily for a 2 to 4 unit, whereas agency we're really maxed out at 75% on that one. So you can definitely come up with a bunch of different combinations here, but when the dust settles, you're going to see that overall non-QM is going to provide many more solutions to your borrower who's looking for investment properties. The only benefit I would see on the agency loan is going to be no prepayment penalty. Uh, on the pricing, there are no prepayment penalty options on non-QM as well, just that rate will be a little bit higher. The non-QM options that I did quote here are all with a 3-year prepayment penalty. So don't forget to show all the options to your borrower, empower them with the information, and then guide them to the best decision to meet their objective.
All right. Thank you, Jose. I don't see any other questions, though. So we'll get it wrapped up here. We do the show 11 a.m. Eastern every morning where we go through the live rates and then do a deep dive into a different loan topic. So we will have a new topic here for you tomorrow. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.